Pashaparo, White at 7. Thank you for tuning. The replay. Big boy pep for my peeps. Big boy pep for my peeps, and that one lonely dislike that happens. That one lonely dislike that you get because that one person keeps showing up hating on you. He don't give a fuck what you say. He just, I don't like this guy. I don't like this guy. It's just one guy. All right. So shout out to all the peeps. Like I said, everybody else, welcome back to the channel. So I know it's like 9 o'clock, but you know, to us ain't no such thing as time. I went down a rabbit hole looking into something, and I think I found something that you're gonna really appreciate. So I'm gonna give it to you because I know you want that. All right. So look, first of all, you know we had the big play going on, you know, since early last week. It's been doing really good overall. We probably did like, I don't know, about 12,000 or so since market open last Tuesday. Rough estimate. So that's including the little, I think we had like a $300 loss last week one day. So here goes today. It's a red day, but I feel good. We lost 200. Well, I ain't gonna say lost. We down $207.32. And that's great because with all that's going on, first of all, I kind of was anticipating a pullback today in general with the hesitantness or at least the quoted, you know, they blamed it on the stimulus delay talk, which it did kind of coincide with the news or whatever. You know how they go, you know. So a lot of stocks got hit yesterday mid-stride on a really good productive day and took a dive all about the same time. So I was expecting there to be some pullback, and it's Tuesday. It's normal. I don't know about you guys, but I kind of been looking at Tuesdays as that like murky day. Like people have they be fiending over the weekend. Like, man, I gotta trade a stock, but it's Friday night and the market doesn't open until Monday. Right. And then so when Monday comes, everything kind of moves. It either moves up or it moves down, but it kind of moves. And I may be wrong because you may be looking at stocks that are doing something totally different, but at least in the last, let's say 3-4 months, that's the trend or maybe that's what I've been feeling, I've been observing. Okay, so with the stocks I'm looking at, so Monday was pretty good. The whole news with the whole whatever, it did hit a lot of stocks. You can see it at the same time. It's kind of like a earthquake on a seismograph. So today I was expecting there to be like a slight pullback. So the 207, that's really good because, you know, this is the first holding position I've had since early November, and to have the success we've had on this play, and even if you count the 300 and something last week, we've only went down $500 on the day. So, you know, I think that's really good execution. I think that shows a balanced portfolio of what I do have, because a lot of things were red today. Let's see here. TNXP, we know that was down two almost 3 whole cent. It's not counting any after hours activity. VIN was down 3 cents. TMDI gave us some green at 6 cents plus. It was up almost 2%. NSPR was down like almost 1%. It was down 0.007. You could round it up to 0.008 cent, so not even a whole cent. So they were all down. Like everything was down, like, but it was down. Everything that was down less than 5%, like 5% was the most anything was down. So we're talking about like Trixie, 17 cent, at closing down. Sins, 11 cents. So you just made a huge run on them. They're very small pullbacks. Now, what did it for us? I think to balance it out a little bit, brought it back into that realm of just a $200 red day. Was FRSX gave us 15%, so they dropped $1.32 off on us. You know what I mean? In the green, that was good. They had that patent that was approved in China, so you can expect them to probably gain some more movement from that in the near future. And RGLS, which gave us a whole 21% today, which wound up being 27%. 27 cent. Excuse me. I'm full today. I can talk to you. Like, I ain't in no rush. Because, like I said, I went down this rabbit hole because I was like, y'all remember RGLS, right? First of all, let's get into some shout outs real quick. Jerry Gibbs, appreciate the support. Trying to get into the stocks the right way. Hey, with $500 a month, what I'm gonna say to that is, I feel you. Congratulations for doing you. I want to open your mind up to, or let's not be in the box, because what is the right way today may not be the right way tomorrow if you're looking for a particular result. So what I encourage people, and again, I'm no professional, I'm no expert. I'm just going over my personal daily logs with you guys, sharing, and hopefully we can all learn together and grow together and change the communities around us and change the world. Because I know you. The one thing about stocks, I tell you, you're gonna start realizing all the inefficiencies in your life, because the last thing you want to do is invest in an inefficient stock. So you start looking around in your life, you're like, no, that's not efficient. I'm not investing in that, or that's so wasteful. Why are we doing it that way? And people, they don't care. They just there for an hour or $1. They don't, so you're gonna probably find yourself becoming a lot more passionate with things that maybe you didn't know you cared about as much. But to comment on that, and I'll touch base with you in the comments below, and the actual comments too. I didn't get that far yet. Just know that what I like to promote here is agileness, or flexibility, because like I said in the beginning, what we may say is the right way today may change if you're looking to continue a certain result. You know what I'm saying? So we have to be flexible and making sure that we are looking for the best route, right? So 5 Neo, man, go Neo. Go Neo. Go Neo. I'm happy for everybody that's getting that Neo dollars. And you got some tonics. That's what's up. We in there with you with that. Shout out Jerry Gibbs. Kermie SJ, right? There he is. There you go too. All right. So Diego, thanks for the video. I have most of my portfolio in TNXP 6,500 shares. First of all, congratulations, especially if you had it in there any of the time it's running up, and just the fact that you end something trying to get something going is great. When you say you have most of your shares, most of your portfolio, that shows me that you have a lot of trust in the company, a lot of confidence, and at the same time you're exposing yourself to a lot of risk. But you may see something or know something I don't, so I can't tell you what to do. I'm happy that you got a position in there, but anytime I think or hear or see someone saying I have most of my portfolio in something, it's that saying about don't have all your eggs in one basket. You know what I mean? So again, you didn't ask me for that advice, but I just want to let you know that would be my response to that. But other than that, congratulations, and do the damn thing. And I'm not, I wanted to go up too. Just make sure it's some risk that you can handle. So, and then Mason, thanks for the video. Any thoughts on Game or BlackBerry? You know what? That's a good question. We can hit that off real quick because it'll actually help promote what we're doing today anyway. If we look at GameStop, right? The chart. Here's what I think happened with GameStop. If we look at the chart, it was at $42 for it was one of those stocks that was just hovering forever. I ain't gonna say forever. I know I looked at it earlier because I was talking about this with somebody else, and that's why I have this line on here because I was kind of talking to them about something, and I can go over it with you what my thoughts were. Now, first of all, congratulations to anybody getting GameStop money right now because it's parabolic for whatever reason. Like, you getting it. And I know the shorts are sick, right? But they're going to have their day too. And that's pretty much what I'm going to say about this. So it was at $42. Now, when I looked for detail on why it was actually going up so much, there was nothing. I didn't find anything. If you found something in the comments below, let us know. I mean, obviously it's going up, but if you found a real reason for it, then let us know. Because what I found was simply the news was just simply saying, hey, they finally might go profitable, and it would be largely due to increased success in sales from basically PlayStations, Xboxes, etc. over Christmas, the holiday time. That was it. Now, in my mind, right, that doesn't justify a stock to go from $42. The video game stock, not even this is not Sony. This ain't Microsoft, right, that made the game. That's getting all the money from the sales, right? This is the sellers, so they're only getting a percentage of the game, and if the game's selling anyway, you get what I'm saying. They're only getting a percentage of what the volume of sales are, and GameStop is not the only one selling them. So they're not even. It's not like they got an exclusive deal or anything. So the stock went. What I think happened was the stock went up in response to that, right? Because it actually was at what? It was at 20, I think. Yeah. There, here we go. This is where it starts. So the stock was at $20. And then, they make that. People start talking about they're going to get that retail money for the holidays. Boom. The stock bumps up. The stock bumps up. The stock bumps up. Now it doubles. Now right here makes sense to me. It was at $20. The holidays are coming. It's retail. Boom. Because right here is when they start talking about it, right? So it goes up. And then I think what happened was it doubled. So you had a lot of shorts get in expecting the short to fall. You know what I mean? Because I know it's small on the chart, but if we go like this and give it some girth, it's a nice little hump there. So I think some shorts got involved with it up here and maybe anywhere along this where it flatlined. The shorts was probably piling up. And then at some point the short said, damn, it ain't never going to go down. And there was a short sale squeeze, or I may be pronouncing that right, but basically it was a short squeeze where they started buying in now to cover themselves in case it was to continue to go up or it didn't never come back down. And I think that's what this spike was, right? And then you had an opportunity for the shorts to get in because it started to come down. So, even though it's up here, I guess I got to learn more about shorting stocks. But I guess this was an opportunity for them to get some short money here after they probably bought in and got some cover here going up. They probably found a way to short coming back down. And they probably had a little bit of a profit. Now, then what I think happened as a success of this activity on the 22nd is that it shows up on everybody's radar now, because to go from $40 to 75 is almost 100% increase. So now people that hadn't even been paying attention to GameStop since Christmas time, or maybe at all, one day wakes up and everybody's talking about, oh, did you see GameStop? It went up 75%, and then it dropped back down. And now they want to get in, and this is what leads us to this spike, and that's why it collapsed so fast, because it's basically just a race buy-in, and then people start taking profits, and it just collapses, right? Because it came in today at $93. It goes up to $159, and then it hits back down to $60. So it lost $100 in value in one day, which was put it less than where it started today. Then you have this where it repeats itself, because now if you're day trading and you know you got a good pop off of this yesterday, this is just my thoughts. Let me know what you think below. And if you're day trading, whether you're on the long or the short side, and you know you got this double parabolic, one up, one down, you're gonna have a tendency probably to look at that stock the next day to at least see if you got another chance to do it again. And that's probably, in my mind, what caused this slow gradual climb. And then you have the same effect again, where you got people buying into the stock long mixed in with people buying in to short it, and it keeps going up. And then you have people wanting to buy in at some point to cover their shorts. And then in the after hours, you got limited access in a lot of cases, or not even say access in all cases, but limited players in the after hours. So it just kept going. And it's huge right now. But I mean, all of this started from an announcement about we sold PlayStations and Xboxes. I mean, that's what you guys do. So to go from $20 to, hey, if you got it all, you got it. But as far as stability and what do I think about it, especially right now, I'm not getting in it. I wouldn't even try to day trade this. I mean, you could if you absolutely had time to sit there and watch it and keep a active trail stop or stop loss with it all the time. But it's not something I'm interested in right now, because my anticipation is that it's gonna drop, unless I'm missing something where they have some huge deal with some blockchain, or they're introducing a online game system themselves or something that's going to be like, you don't need an Xbox or PlayStation. You can just go to GameStop.com and play any of these 5,000 games, sign up for a subscription-based fee, buy our controller. Like, unless they got something major coming out like that, like, I don't understand this climb here. And I don't think it's sustainable, but that's just my opinion. So we'll close there with that. Now, as far as BlackBerry, I was in and out of BlackBerry in early December, and I was more day popping focused then. So I remember my last good hit with it. I got in. I took the notes from my little history, and I had a pop on it at 765. And I sold it at 802, so that was a nice, almost a full 40-cent flux there. And I was waiting on BlackBerry to do something, and to be honest with you, like we talked about in some of the other videos, you get distracted. I'm going to get to RGLS because that's what you're here for, I know, but let me interact with my peoples here because they had some good questions. So what actually happened was, I got distracted. I got involved with some other stuff, and I lost sight of BlackBerry, and BlackBerry did the BlackBerry shuffle. You know what I mean? So it came up, and I didn't get that, which is okay, because I was getting some other stuff. And good, congratulations for everybody that got the BlackBerry juice. All right. So I really don't have a take on that, because I was looking for BlackBerry to go up, and I just wasn't in it when it did. So shout out to you if you're in it. I would have to actually do some more research before I could give you a valid opinion on that. And I just so happened to be talking about GameStop earlier today, so I already had those thoughts formulated in my mind to share with you. Now, you guys remember RGLS? We talked about it with their conference, that conference they had, and we were waiting and looking, and that's when we found PTE because they were part of the same conference, and we were waiting for Regulus to pop, and it didn't pop, and PTE exploded for us, and we got that, right? And so we still came up off of the deal. RGLS, introduced us to PTE, and you know how it goes sometimes, right? We pop both of them in the long run. You know what I'm saying? That's just what it is in life. So, but I think I found out exactly why RGLS went stale on us during the conference, and PTE was our thing then. So RGLS, the P.E.P closed at $1.55 today. It was up 21% for the day, and I think if my notes was whatever the title said, I think I 35% in the last 4 trading days, if you account the aftermarket today, right? So we've been in and out of this since early December. Again, we're playing the up, we're selling it on the down, max and profit, play today. Sometimes we keep it, hold it a day or two, but we are mainly capturing a lot of the upward swings and then getting out of it for the downward because we recognized the frequency on that pretty early, and that's what we were doing. It had a nice oscillation to it, and the low establishes right around here, as you can see here, between the 110 and 120 range, and if you time it right, you would have a nice upswing back towards the 130 or what have you. So that was pretty much the guarantee. Not that nothing's guaranteed in life with this stock stuff, but that was pretty much the nice guarantee. You could get a good 20-cent swing out of it if you paid attention to it and knew when to hit it. So then, since the conference, though, I've been paying a lot more attention to it because, again, the whole purpose was it was supposed to pop, and we were waiting for the pop. Now, this last time we got in just like normal, right here at the bottom, 119. All right. So, like I said, after the stall. So what does this? Let's go into what I found though, because that's what I think is going. Because this right here, since December, beginning of December, so we're almost talking 60 days. I've been watching this. You see my lines here, you see my boxes, and this is the first time in those 60 days that it's broke and held, not just like popped up like a couple cents and then dropped back down, but actually popped, went through and held above 150, above into that yellow box. So now I'm really, really interested to see what happens. And that made me say, well, let me do some research on what's going on with it. And of course, there was nothing really going on with it. It's just gradually climbing, and it just went higher than it's gone, at least since I've seen it in life, right? So, but here's what I found. First of all, and I need your help, right? Because I don't pretend to know everything. So this is what I found here, okay? I was doing some research, and what we know is this. Let me see here. Which box is it? It's this one. So what we know is everybody was talking about this a while ago. 0.72 asset management, and it said they bought 8.5 ownership. 8.5% ownership of the company, right? They had enough stocks that they bought 8.5% of the company. And so I was interested in that because they're a hedge fund, right? And a hedge fund is an investment fund that trades in relatively, this is per Wikipedia. I like to make sure I got facts. I don't operate on emotion. Which is a gift and a curse because you stay in conflict with emotional people because you try. Anyway, another conversation. So a hedge fund is an investment fund that trades in relatively liquid assets and is able to make extensive use of more complex trading, portfolio construction, and risk management techniques to improve performance such as short selling, leverage, and derivatives, which I really should learn about what a derivative is because that just introduced me to it. So now I gotta go learn about that. See what I'll be doing later on tonight. All right, so here's the thing, right? They had to. That was in the beginning of December, and I was trying to find this timeline of what was going on here to try and find what's causing this. So then, and there's some benefits to institutional money, which is why, because I like to learn stuff. So this led me down the rabbit hole, and I was like, well, so now that we know what a hedge fund is exactly, we always hear about the people getting excited if institutions are buying the stock, which is, we know there's a float, so you can buy more stocks than there are stocks, and it's not like it kind of affects supply and demand, but it's not like they're gonna ever run out of the stock if you want to keep buying it, right? It's just gonna, that'll make it either go up or down. That's supply and demand, but there could be 100 stocks and they could sell 1 million of them. That's how this works. So, that part's kind of interesting, right? So I was looking, and here's what's interesting. Okay. Let me see. Let me get you on the screen. Hold on. Because what this was talking about was, it was like December. I think this actually took place and closed. No, it wasn't. It started December 31st and it closed on the 4th of January. And here's what was interesting. So early on, like the 19th or whatever, or something early in the first half of the month, this was what that 0.72 was, everybody was buzzing about, right? That 0.72 asset management on 8.5%. And then you had this, right? January 5th. Now remember, on the 8th, Regulus announced the closing that happened on the 1st of 19.5 million private equity shares, right? So then you had this announcement like towards the middle of the month. That brings us to this, right? And then here, very quietly, this occurred, where there was, on the 31st, there was a private equity sale. It was like 47 million shares or something like that, and they sold it privately. One of those situations where the company says, yeah, we're not going to get any of the proceeds from this going forward. So what I found was interesting was this, right? Look at the total number, and there's another company down here at the bottom that was on like the next page that was like 400,000, and they had like 400,000 shares. It was less than 1%. So, but if we look at this, right, this is what I found that was interesting. This company, Victory, had 14 million, and then afterwards they had none. What everybody was hyped about, 0.72, had over had over 5 million shares, and afterwards, after offering, they had none. Now I need to honestly do some more research on this, why I'm interested, but I wanted to put this video out before it became like midnight so you guys could at least get some of this insight, because I want to have a better understanding of this before and after, because what I'm seeing is 0.72 had shares. It was announced they had 8.5% of the company, and then after the offering they had 0. So like then this company, had some and had none. But here's the other interesting part. These two companies both had 9.99% before, and they had 6,700,000 and change each. And then after the offering, they both had approximately the same amount again, but it was 9 million, so it went up. and they still have their 9.99%. So whatever transpired, I mean, of course, there's more shares, right? But what I want to show is that there's more shares now, but a lot of the institutions no longer have shares, which I think is good, and I'm gonna tell you why I think that, because when I looked into some S3 information, right, this is what I came across. So the key points is this. Now, what they did was they sold it for like a minimum. I think I read $1.24, and I'm gonna tell you what I'm looking at this now, because now I think I understand why stocks like dip towards that point, and then what I know is I know the pattern, right? The stocks normally, when the offering comes out, especially if it's severely less than the current stock price, like the stock drops towards the offering amount, and then does what it do thereafter, which is normally go up, right? So this is all part of why this might be the good time for you to get in RGLS. So give me a minute. You know, I'm not an expert, so it takes me a little longer to explain some things to you because I don't have the expert language. I got to use Pasha Talk. Make sure you subscribe and get the notification for your next dose of Pasha. All right, so listen, here we go. Now, basically what they did is they selling the shares, in this case at $1.24, I think it was, and a selling stockholder, because now if you bought the lot, you are now a selling stockholder. They no longer own the stock. Like, you can do whatever you want. It's kind of like if you know anything else you sell. Like if I sell you something at wholesale from the factory, and you go out there and resell it, you're the retailer or you're the reseller, right? So this is kind of like the same language to me. Tell me what you guys think in the comments below. So the ordinary brokerage, okay, so a selling stockholder may use one or more of the following methods when disposing of shares or interests therein. Ordinary stockbroker transactions, right? That makes sense. Block trades in which the broker-dealer will attempt to sell the shares as an agent, but may position and resell a portion of the block as principal. You know, okay, so they can sell as a brokerage, they can sell in bulk. Okay, that makes sense. I'm kind of just, looking at what I think that might mean without research. I told you I'm going to go into this a little further myself. So purchases by a broker dealer as principal and resale. Okay. And exchange distribution in accordance to the rules. All right. Privately negotiated transactions. Okay. All these sound like ways you can sell stock, right? Like, it might be worth $1 a day. I'm gonna sell it to you for $5 now because we both know it's gonna go to 20. You know what I mean? Like, that could be a privately negotiated transaction. I think that's something people do, right? So through writing or settlement options, okay, or other hedging transactions through agreements between broker dealers, a combination of any such methods of sale and whatever is permissible by law. So what I'm getting at is this. Now I think I have a better understanding of what's going on. And now I can tell you why I think this is even a more realistic move that we're seeing here with Regulus, because it gives me more confidence. Because if you are a retailer, right, and you buy, if you're selling shirts, and you buy your shirts wholesale already made, let's say you're not making them, you're buying them wholesale, and you buy them for $5 a piece. Then what your job is to sell it for more than $5. Like, you're gonna advertise, you're gonna promote, you're gonna do whatever it is that you do as a retailer to make a profit. So I think the good news in this case is when we have these especially in a small stock like this, right? When you have a sale that's like such a large volume, because it basically was that if we're looking at those numbers right, where the one went from like 6 to 9, we could round it off and say 30%. That was 30% of the stock, right? Well, actually, there you go. Like 9 million is supposedly about 10%, 9.7. So we could say there's 97 million shares, right? So if you own 10% of them, not to say you got like control over the stock, but you definitely want to see it go up because you're going to be looking to make money off of it, right? You're the retailer. So this stock was last offered at, or the last offering was $1.24. So the institutions that have this now, or whoever those buyers were, private or public, hedge funds, or the guy next door to you that you didn't realize was a billionaire, they don't want to see it go below $1.24. So you got two things working for you now. One, the company made some money. They need to have the cash. That's going to allow them to grow and function and work on their business and grow. And at the same time, I think it's safe to say that we shouldn't expect this to go back below $1.24. Which, you know, it's been as low as $1, I think. But I'm telling you why I think that's a good sign. And this, with the institutions we saw leave, that means that not as much of the stocks is being held by large people that just got a large portion of the shares. So when I see this growth here, I'm feeling like this growth is now more investor related, like private or individual investor related, which is a good sign. And this volume for the day is really, really more thick. It's really more a saturated volume. It's really more complete activity throughout the day than if you look here in the near past, recent past, where we've had some spikes of volume mixed in with a lot of relatively low volume. So whatever's going on, I think this is a more natural push. It could be generated because people now don't have $1.25, $1.24 value in it, and they want to see it go up. But also that puts the company in some more money in their pocket. And we already know we were looking at them because they got a good product and they just need to get their shit together so they can blow up. All right. So this right here was the play of the day. They, like I said, they were up like 20-something%. That was a pretty good pop. And this is all natural because I've been holding on to them. So it wasn't like it was just a day's execution. I've been kind of busy, and that's why we set up this little mini portfolio and had the right picks to hold on to, and everything's bleeding into that. So yeah, we're down 200 for the day, but it's the best feeling 200 red day ever, because I think if we can get some more confidence in the market overall, we know we're in the right positions, in the right stocks, and this is gonna look good in the near future. So if you haven't already, check out RGLS. Check out the video we did on them around the conference time. And the cool, here's the other thing. Matter of fact, speaking of that conference, look, I was great. Let y'all go without letting you see this, right? So, the cool part is it was stopped at 155, right? And it's at 175 in the after hours. So it's already up another 20 cents, but that's included when I said 35% if you count the after hours. So just know that it's going in the right direction still, and hopefully it keep going up. There's no real other news about it. It's one of those moments. But here's what I wanted to show you. Remember that conference? Look, H.C. Wainwright Virtual BioConnect Conference. I was looking, trying to find out at the time who this conference was. And, excuse me, that's how we found the PTE, because they were also part of this conference they were also presenting at this conference. But I really didn't find a whole bunch of information about H.C. Wainwright because I wasn't looking in the right area. And here's what I found to make it all make sense. H.C. Wainwright is a firm that has an analyst that's covering them. Right? And if we go back to the it's the small guy. Okay, so the one down here that I said 400,000 shares, I think that was Wainwright. Anyway, it's a firm that has an analyst, and I think they were on the bottom of this list, and that's the significance of that conference. And so now to put the whole puzzle together for you, right? I was looking for them to pop during the conference, like due to the activity, the announcements and everything. But remember the conference here, here we go. So check it out. Remember this, look at his name, H.C. Wainwright, and then we'll go back to press releases. H.C. Wainwright Conference. Now look at the date, January 5th. And remember that sale was from the 31st and it closed on the 4th. The private sale where they sold off, you know what I mean? So I was looking for them to pop during the conference, but I think what actually and it would be a brilliant learning what these CFOs do. I think that was a brilliant execution because they had a sale and they probably got some sort of influx of buyers due to being in a conference. So instead of it dipping, it remained flat. And that's why I was looking for it to pop, and it never popped. Possibly, this is my opinion. And it never popped because it did pop, but the pop was diffused in the drop because they executed the sale and it closed the day before the conference. That's the missing money. That's the missing money right there. So what would have normally happened is they would have had this. It would have been like PTE, where they had a nice jump up. People would have came and had attention to it, and then the stock would have done whatever it does after that. Maybe go up more, maybe hold a new high level or whatever. But what they did was they perfectly placed this sale. Everybody's hype about the conference, even myself. We saw it, but I didn't really pay attention to it. It was a little sale. It said they weren't gonna get no money from it, and that's all we heard. And we were like, conference next week. You know what I'm saying? I don't know. Tell me if that's how you felt about it, if you were with it back then. So when that affected the stock, it was offset by the influx of attention due to the conference, and that's why it just kind of remained flat. And there was no pop. The pop was there, but the pop canceled out the drop. It was a pop, top, drop, top. You know what I'm saying? That's the hidden money. That's the hidden money. So now, go back to and that's what I was building all this up for. Y'all almost let me leave without telling y'all. So that's why this move here is the real deal. So now we need to see, and it's the first time it broke into the yellow since the beginning of December. So let's pay close attention to RGLS. It's already up to 175. I had, I said to myself, so in my notes here, right? I said, let's see the movement. Once above 170, we'll be looking for 182 to 195, and that's why I got the green box up top there, which I was gonna say could be tomorrow. And then, like, I was making a car, I got delayed a little bit because of the rabbit hole research. And by the time I come back at the end of the research, I see that the after hours is over. It's already at 175. So to tell you that once we get over 170, it could be, well, we're already over 170. Let's see if it holds. 182 to 195 is definitely in the scope of things. And sky's the limit. Let's get it. Thank you for tuning. Big boy Pep. I'm Pasha Pyro. Make sure you subscribe, hit the like button, notification button, share with someone that you care for. Enjoy.